From the office of MrTopStep.com, this is Danny Riley with today's midday update. The name of today's video, S&P 500 Futures, Complacency, and Destroying the Status Quo. I want to remind everyone that these are not our father's markets or charts, and in no way, shape, or form are they ever going back to anything like what they used to be. No way. The high of the day in the S&P came in at 22.72.5 early. The low came in at 22.62 quarter, mid to late morning, and last, I'm not looking, we're 22.60, 63.75. We're down 12.75 handles. Total volume, 1.1 million minis trade, but I want to remind everyone, 200,000 of that came from Globex pre-open, so we have a total of 900,000 traded. Not all that great for this type of down move. The MIM starting to show small to sell, but we're still a little early for that. The S&P volume in the pit, they told me about 400 big S&Ps have traded in the pit today. Now, the first trading day of February is what I call booked. It's got an absolutely gigantic economic calendar. It starts out with the motor vehicle sales, the MBA mortgage applications, the ADP employment report, the Gallup U.S. Job Creation Index, the PMI Manufacturing Index, the ISM MFG Index, construction spending, the EIA Petroleum Status Report, and the FOMC minutes. And then I want to remind everybody, Friday is the January jobs report. So it's a pretty condensed week, and there's a lot of economic releases. Now, I'm putting out a warning right now. And I've been putting out a warning. I started saying it last year that when it was leading up to this, and then once Trump got elected, that I thought that there would be big, sharp declines in 2017. Now, I'm putting out this downside warning, and I think it's real. Now, what we're seeing today is we're seeing some kind of rotation. They're selling the big names, and they're buying the little names. They're buying the Russell, and they're selling the big names. Now, from what we've learned about this is that the Russell was the leader on the beginning of this rally, and the fact that it's not showing a lot of weakness could be considered bullish, but I'm going to tell you, I think that there's too much complacency out there right now. Everybody has been buying the dips, and I think that that's going to end up biting people in the ass in here somewhere. I'm not saying that the S&P is going to sell off today. I'm not saying that it's going to sell off tomorrow, next week, next month. And I'm saying that what I'm saying is that it's coming. And I feel it in my gut, and I feel very confident about this call. Now, it's all about timing. And I know that one of the things about this trading futures during the day and trying to catch a flyer and all that, it's almost impossible. You know, you get in here, you make a little bit of money. If you can walk out with that, you're doing great, because I don't think a lot of people are making money out there. I know that people don't like talking about it, but I think the industry is shrinking. It never recovered from the 2007 credit crisis. There's a very select group of people out there, and I think most of these guys that are trading are in their late 40s, 50s, 60s, and 70s. They've been doing it a long time. They don't risk a ton of money all the time, and they're not out there trying to make thousands and thousands of dollars like we used to do in the Fed. Now, what I want to do real quick is I got a couple other notes. One thing I'm looking at right here. I guess the question is, has the dam broke? Now, I think it has. I think that, one of the things I don't think the markets expected was President Trump to initiate all his campaign promises in the first 8 or 9 days of his tenure. I think it's, I'm excited, but at the same time, I'm getting a little scared. And the part of the reason I'm scared is I think all this foreign policy stuff, I don't think that you can run your company like he ran his company, like he can the U.S. government. And I think that there's going to be a learning curve here. And in that learning curve, it's going to mean that there's going to be a lot of wild swings, higher volatility, higher volumes, and I think liquidation. Now, the S&P right now is up 1.5 or a little bit, 1.6% in January. And most of that came from the gains in the technology sector, where the S&P techs were up 4%. I don't say this very often. I think that one of the things that I'm concerned about is the extensive bullishness that's in the market. Bullish consensus was on an 18-month high when the VIX was trading under 11. I think at some point you got to step in and you got to be a contrarian, and that's kind of what I'm thinking here. I'm a bull, but I'm no fool. But like I said, I'm excited, but I'm scared about what's going on with our government right now, and I think that that's kind of a widespread feeling. The other part about this is that I'm also concerned about is the word complacency. With that buying the brakes mentality, and everybody been doing it for so long, a big shakeout could kind of change the whole way people see the market. And I think right now everybody's still thinking higher prices, but I think that 2,300 in the S&P or a little bit above could be a ceiling, at least for the first part of the year. And the other part about this, I think what Donald Trump brings to the table is while there have been record low volumes over the last couple of weeks, we've seen some amazingly low volume days. Last Friday, there was only 900,000 minis traded in a full session, and I think 120,000 of that came from Globex, so that lowers that, went down to 880. And I think that more and more people are just kind of taking a step back from this, saying, hey, we got to get our handle on this. Markets are up too high. We got to see what the next move is. But the other part about this is with Donald Trump using his Twitter and the airwaves and the news, these algos are going nuts over every headline that comes out with Trump's name on it. And I think that's going to continue. I don't think that that's going to slow down at all. And last but not least, I do think one thing. It's almost impossible to keep up with the pace of the new president's initiatives. I mean, it is literally crazy. Now, I'm going to finalize this by saying that I want to do more videos, you guys. It's not easy to do them. There's a problem with getting the videos out. I've done a couple, they didn't get out, and that just pisses me off. But that said, next Monday is the Mr. Top Step Boot Camp, and I'm going to be in there a lot. I'm going to be in there talking because I think that things are really, really evolving fast here. As Donald Trump unwinds all these things that, all this stuff that Obama did, I think things are going to become frayed. I think that there's a high potential for a big, big leap in volatility and some big drops in the stock market. But that said, the boot camp is next week. We've got Raj from Bank of America join us. It's a great, great, great time. He's going to be talking options, a way to use options in this environment. We've got a whole list of everybody. And I'm also going to be trying to get the Pitbull to come in. He's been reluctant, but if I just get him to agree to come in for 15 minutes, that would be great. And that was him right there. But anyways, you guys, I got to run. Markets are starting to pick up. I suspected they would. And please, do me a favor. Jump on this boot camp ad. I don't know. I lowered it down to a ridiculously low price because, again, I'm not out here trying to make money on this kind of stuff. I'm trying to keep the collective together and keep profits going through these accounts. That's all I'm out to do, all right? And be honest with you, I've had a hard time myself. I'm going to go out January up money, and that was what I wanted to do. Not quite up as much as I was, but that's okay. I'm here to fight, and I'm not going to stop fighting. So we'll see you guys tomorrow on the final 45.